Good morning, everybody. Welcome to the Game Plan. Of course, I'm Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, so we have some big stuff going on. Today is the big monumental Fed meeting or decision day. 2 p.m. Federal Reserve will announce their decision. And again, let's be clear, there's not expected to be any rate cuts, let alone any rate hikes. It's going to stay neutral per the Fed Watch tool, but it's all going to be about the guidance. Now, what do I mean by the guidance? Well, during the press conference from Jerome Powell, which will be at 2:30 p.m. Eastern time, he's going to get asked a lot of questions about the economy, inflation, the trade wars, the potential impact of those trade wars, and then probably be asked about Trump's attacks on him in terms of his role. So all of these things the market will be zoned into, I believe, more than the initial announcement on rate policy that will be out at 2 p.m. Eastern time. All right, so that's number one. Number two, in the overnight, we had initially, really after the market closed yesterday, we had India and Pakistan beginning to fight. And again, these are two nuclear superpowers, so it is worth majorly keeping an eye on this escalating conflict. But then after that, we saw Secretary Treasury Bassett basically coming out and saying, hey, we're going to start negotiations with China. So we're going to actually start talking. And the markets initially were going down on the Pakistan-India news and then up dramatically on the China news. So let's dive into the charts here and take a look. You can see right here, this was yesterday's price action during the day. You can see this was the drop that we saw on the back of India and Pakistan. And then look at this. This was the pop in the futures in the basically 6 o'clock time frame that was on the announcement by Bassett about talks with China. And since then, we have faded a little bit. So again, you can look at this and say, okay, do we have a parallel formation here? Kind of looks like it a little bit, right? I mean, you could make a case that you have a general parallel starting to form right here. And you can see, again, pivot lows right here, probably going to get a little bit of support here. But bottom line is, at least for me, I'm looking at this market today and saying, okay, where am I trading today? Generally, I'm trading in stocks that announced earnings, and I'm not expecting major moves intraday on the stock market itself until 2 o'clock or 2:30 p.m. Eastern time. All right, so what does that mean in terms of where the trades will be coming from? Well, we have UPST. We're going to go over that up here. We have Sarepta Therapeutics, SMCI, Uber, Disney reported earnings, and even WeRide's worth keeping an eye on as a momentum play to the upside. Before we get into that, though, let's flip over to the daily chart of the S&P. And what do we see here? We see that basically we are hovering under that major gap fill right here on the S&P futures. We got rejected for 2 days. Today we are up a little bit, but still below that level. So this line in the sand right here around 5,700 on the S&P futures. It's about 56.75 on the S&P itself. This is the line in the sand that I will continue to watch. It's also right at the 618 Fibonacci retrace from this all-time high to essentially this near-term 52-week low. All right, so that's number one. Number two, let's look at the dollar ahead of the Fed today. The U.S. dollar continues to show weakness here, and you can see again that you have resistance up here right around 52.70, 102.75 on the Dixie. Now, again, please keep in mind, this is beginning to look more and more like a bear flag, right? So essentially what we have here, folks, is a pattern formation that while it could continue up, it is making that same formation that we saw on oil. And remember, I talked about that bear flag on oil, and it ultimately has started to play out. You can see right here, down move, inside bar action, and then the breakdown continues. So if we go back to the Dixie, the DXY, this is, again, down move, inside bar, and maybe, again, it could even go back up to here. We'll see. But the point being is that this is resistance, just like on oil. Oil was at $65, the resistance. This is around 102 and change. But ultimately, again, this will be the consolidation where you look for that next leg down on the U.S. dollar. So, again, we don't know what the Fed will do, right? The Fed could make the dollar bounce. the Fed could make the dollar drop. But ultimately, we know that as long as we stay on this path, whether it's a drop or a pop on the Fed decision today on the dollar, the midterm outlook remains probability based to be further to the downside on the dollar. All right. So again, just keep that in mind. 10-year yield just remains in a tight pattern here. And if we look at the 10-year, again, pulling back off this little parallel line here, just a little bit today, flattish on the day, waiting for the Fed. The question I have, this is a bullish pattern on the 10-year. So there's two paths of potential upside, right? So upside is the likely scenario. What we don't know is, do we come down here and then break up, or on the Fed decision, do we just break up? Right? I mean, again, probability is telling us that as long as this line holds here, yields are going to go higher. We just don't know, are we going to consolidate more inside of this parallel here before that inevitable likely up move on the 10-year yield. And again, the idea being is if the 10-year yield goes up, chances are the markets are not too happy about that, and that would favor the downside. All right, flipping over to earnings, the stock UPST, which is a buy now, pay later kind of financial firm, is taking a big drop today, almost 20% to the downside. Take a look at that drop on earnings, folks. Yesterday in Earnings Trader, which is it's basically to summarize Earnings Trader for big earnings announcements on days where we get like good earnings. The traders and I jump on and we actually day trade these levels. So we basically go on. It's part of Smart Money Stocks and ETFs. So while Smart Money Stocks and ETFs is a swing trading service for swing trade of stocks and ETFs, we like to give people a little taste of the day trading side. So in that service, you would get complimentary these Earnings Trader things. And yesterday, sure enough, I had a great level here on UPST, and we played it beautifully. It was right here at 41.95, right here. You can see the gap fill, and then this area right in here. And sure enough, if we flip over here, look, it went literally one candle goes right there, and then look at the bounce on the next candle. So we went as low as 41.25, and we bounced all the way back to almost $44. And sure enough, I bought right here. I had my order at 41.95, and we got out at 43.07. Beautiful gain, quick trade. I love those. And again, congratulations if you were in that broadcast and be able to see our charts and hear my trade alert. And I gave the level like literally 10 minutes ahead of time where I put my order so everyone could follow it. Pretty cool stuff. All right, now going back to the daily chart. So needless to say, this level is no longer valid because it's already been hit too many times. So what we do is we go down to our next pivot point. I'll be watching the 37.75 level. These little lows right in here, right around below $38. That'll be first support. Next support will be 35, and then obviously double bottom at 31.70 or so right in there. And again, they had bad earnings, buy now, pay later. Again, eventually people that buy now, pay later, if they struggle enough, they're just going to stop paying later. And then that's the problem. Sarepta Therapeutics obviously dropping yesterday massively on the FDA news about the new biologics director or head, who is pretty much anti-gene therapy, anti-vaccine, etc. The point being is the stock fell sharply yesterday, and then after hours they reported earnings, and it fell another 20%. So the stock literally in 2 days has gone from $62 and change down to a low in the after hours of 33. It has bounced back to about 40 here. But one thing I will say on this, guys, this to me looks very interesting on a swing trade basis, and I'm going to show you why. See this area right here, right in this zone here? There's a lot of support. Look at this pivot from 2014, pivot from 2015, another pivot from December 2015, and then high pivot here in 17, again here in 17. And we have now retraced into that level. There's a gap fill a little bit lower at around 34. But basically, suffice it to say, if this were to come back to, let's say, 36, 35, 34, I probably start thinking about this as a swing trading opportunity. Now, you could say, oh, man, but what about the new head of the biologics division at the FDA and the pressure he might put on these companies? That's a valid concern, but it looks to me like price is being discounted enough to take that risk. And remember, everything we do is probability based. It's risk versus reward. What's the risk for the reward? And honestly, at some point, if they have good enough drugs and good enough therapies, it likely gets through. And to be honest, The company's profitable at this point. Granted, they didn't report a profit yesterday because of a one-time charges, but ultimately, I still think this is one to take a look at. All right. Next up, we have SMCI. SMCI reported earnings yesterday. Now, remember, just like a week and a half ago, SMCI warned on earnings. The crazy thing about it is they warned their earnings were going to be bad, and then they warned in yesterday's conference call in their earnings that it's going to be even worse. And so the stock obviously had taken a hit in recent times. You can see this was the gap down from this close to here on the warning. Then it had bounced a little bit, and then it's right back down because they warned again. Now, for me, this is the level I'm watching, folks. And listen, maybe it doesn't get there, but you have double bottom and gap fill. And look at this downsloping trend line merging right around this $18 to $19 level. Now, again, it's still quite a ways away, about 30% away. But as a swing trade, that would be a multi-factor level where the probabilities would highly favor a significant bottom or bounce in the stock. Now, on a day trading basis, I could see maybe 29, this low here and this low here, maybe appears to 29. There might be an opportunity there. So we'll probably be looking at this in the live day trading room to trade. Uber reported earnings this morning. The stock did fall initially, although bouncing back up a little bit from yesterday's close. It closed yesterday at around 80, just under 86. It's only trading at 82.60. It's not a big move. If we look at the stock again, here's the line where it's trading now. You can see again, it had a big run and a small pullback. I don't have any technical trading levels that are close here. The only thing I would look at is this area right in here. You can see, again, look at how, and again, this is how my eye picks it up, but I want you guys to pick this up. You have this pullback low. So it broke out and then it kind of held. And then if we flip that over, look at how you have high, high, and high, and then the high right there. And even right here, you got rejected and then it broke out. So you can see how this zone has been a major support and resistance level going back basically to the beginning of this year. Therefore, if price falls into it, that would be a major level. And again, listen, I guess it's only about $5 away from current price. So I guess it could get there today. So suffice it to say, if it got there, I would start to look and be interested in a day trade here on this Uber chart. Disney reporting, Disney having a good rally here. Good rally on Disney's earnings here. The stock on Disney here going to the upside beautifully. And again, rallying up here. You can see it closed yesterday here. Now it is coming into a little bit of a level, and I'll show you my levels here, guys. So a lot of people are going to look at this high pivot. That's probably a potential level. I'm seeing the gap fill just above. I like gap fills better because it's a little bit more extended, and I feel like everyone's going to look to short this one. It's going to stop them out by going higher, and I'll be waiting right here at the 103 Pierce to start a short position. Now, again, where would I add on this if it continues up? There's another major level around 106. This pivot low should act as a good level of resistance. The other thing you can do is you can take the highest point and do your Fibonacci, and then you have your 618 right in that same gap fill here, and then just above the gap fill, you have your level here at 104. So 103 Pierce and 104, 618 and gap fill right in that zone. That to me looks very, very attractive for a day trade. Now, what about a swing trade? In terms of a short on a swing trade basis, maybe if price were to get up here, I think this would be the one key pivot high, pierced here, and then touched there. So again, this maybe would be a swing trade, but obviously swing trade levels can change over time, so we would have to wait to reevaluate. Lastly, I just want to mention WeRide. WeRide up a little bit in the pre-market, but I liked this one going into it. In fact, we hold this in smart money stocks and ETFs. You can see the stock was beaten down. So over here is where NVIDIA announced they invested in the company. Then obviously the market tanked, and this brought this thing so low, and now it's just starting to bounce up. I think it at least gets back to 1230 or so here, which is your former pivot low. So remember, support here now becomes resistance over here. But again, this is now only about, I think it's only about a $2 billion stock. And again, potential for a continued move up is there on WeRide. And I continue to think it has upside at least to about $12.30 on that stock. So keep an eye on that one on your radar. It can be a fast mover. It was up 30% yesterday. The news yesterday, by the way, was that they basically expanded their partnership with Uber. And Uber is essentially using their automation, their AV, as it's called, autonomous vehicle, basically programming and suite of products for their Ubers over there in China. So pretty cool stuff. It's the future, folks. Again, in an X amount of years, who knows how many of us will actually be driving on a regular basis, or we're just going to have cars just say, hey, take us here, and it's going to take us there. Great in terms of probably lowering the accident rate, especially with people on their phones in cars, and drunk driving obviously could be a thing of the past, which is very cool. At the same time, for those of you like me that occasionally like to drive, hopefully we'll still be able to take over or have our old style vehicle that we can drive when we want to drive. All right. So pretty cool stuff. All right. Let's go over a couple charts here. Gold yesterday had a big surge to the upside. Remember, I had exited most of my shorts on gold when we were down in this range here. Yesterday, I did re-enter a short on gold with commodity members, smart money commodity members. All right. So again, we re-entered here. I actually also bought some calls on GLL with options in members. So again, smart money options. We did grab some calls. So far, so good as gold is pulling back. And the reason you might say, well, why? Why would you think this? Well, number one, there's just too many technical signals. So you could go with the emotional side, which most people trade with, and say, oh my goodness, Pakistan and India, that could be, a major catalyst to the safe haven of gold. You could say, oh my goodness, gold's the push in the last couple of days on gold has been mammoth to the upside. It's going to go crazy to the upside. I do agree that over the mid to long term, it's still going higher. But when I have technical signals, I have to shut off my emotional brain and say, okay, I'm a probability trader. What's the probability here? And so when we look at this, we have a topping tail, which is a bearish reversal signal. We have a bigger parallel channel, right? So we have our bigger parallel here. Low pivot to low pivot should mark the high here for a bigger pullback than we've gotten. And then we've just basically done a retrace. So see the retrace back to this level. And if we do a Fibonacci retrace, let's see what that retrace is on the Fib. 786, perfect 786 retrace as well. So again, as of now, the factors point to downside in gold. Now, we are getting a little downside today. We'll see where it ultimately goes. Now, if we close above the daily topping tail and the weekly topping tail, then that's a different story. That would negate the negative bias on gold. We'd also close above this parallel. But as of now, my job is not to emotionally make decisions. My job is to obviously look at the charts, the data, and the probability and make my decisions off that. And if we all do that in trading, I promise you, your results will be 10x better. I mean, it's just amazing how much better we can all do by focusing on non-emotional decision making. Frankly, in our whole lives, non-emotional decision making is probably for the best as well. All right, let's go over just a couple other charts here as we get into things. We'll look at silver. Silver had a good pop yesterday. But again, it came up to this little minor level of resistance, and it is pulling back a little bit. Now, what we're seeing is silver is getting in what we would call a wedge pattern here. So notice how it's getting squeezed between these two lines. These two lines are getting closer and closer. What that tells me is that eventually silver is going to have to break one way or the other, right? Is it going to break out and go here, or is it going to break down here and go all the way back down here? So again, I'm not going to pretend to know which direction it's going. At this point, I don't have a good probability one way or the other, but let's watch and see. I do think whichever way it breaks, we should get a significant move in that direction. That's the way wedges work, by the way. So let's do a quick little case study here. Let me get some screen here. So if we basically have a wedge pattern and you have essentially you have ups, you have downs, you have ups, you have downs, etc. Right? So essentially what's going on here is you're winding a spring. You're keeping price. You're compacting. Think about it like a pressure cooker. It's pressing this together into a tighter and tighter range, building momentum or building energy. I shouldn't say momentum, building energy. And so what happens is when it's released one way or the other, it's usually a big move in that direction. Okay. Because again, price has been essentially pressed to the point where it's ready to explode. And that is a key thing when you're watching wedge patterns. You want to understand that usually when it breaks above or below a wedge, it's not just a little break. It's usually a big break and a bigger break in that direction. So just a couple things to kind of keep in mind there on the charts of silver. And then, by the way, these wedge patterns appear everywhere. Oil today, let's bring up oil and take a look. We know we had a bounce the last couple of days. I talked about how you kiss double bottom after the bear flag breakdown, and then we'd go up a little bit, and then likely we're going to turn back down. I still think that's going to happen. Oil is basically flat on the day. And then if we look here at the chart of natural gas, had a little bit of a pullback off this level, pushing up here. This again remains my level where I will likely initiate a short position. But again, we haven't gotten there yet. I didn't initiate one here. As of now, I'm okay with that. It's only a small pullback, but let's see if it can break and go up into this range. Lastly, Bitcoin, guys. Bitcoin had a great move here, but look at where it went. So low end of your parallel, high end of your parallel, and where was the high on Bitcoin today? Right up to that line, and it's getting rejected. So as of now, Bitcoin is still a neutral rating to me. It's good to see it back above this 96,400 line here, which is your bigger parallel here, that as we go out, this is your bigger parallel going back to 2017. So that's good, but it hasn't confirmed, and it's still stuck within this parallel. So to me, as a technician of the charts and of probabilities, I give that a neutral bias, meaning that it's not heavily weighted one way or the other. I need to see more data to be able to have a heavy weighting, either bullish or bearish in the near term. Remember, I'm just talking near term here, like literally days to a week or two out. So I need more data to make a probability-based assessment of the chart. All right, guys. So listen, Fed decision today, 2 p.m., press conference at 2:30. After hours, we'll have some more earnings, although, again, we're getting kind of towards the end of earnings season. All the big companies mainly have reported, except NVIDIA, which will be in a few weeks. And needless to say, keep an eye on any more comments about China from the U.S. government, and also keep an eye on India and Pakistan. Again, the markets are largely ignoring that, but I can't stress enough that hopefully nothing bigger happens, but they are both nuclear powers, and that's just something we have to keep in mind when fighting starts up between two nuclear powers. And right now, the markets are ignoring it. Obviously, the China news to the markets is more important. So is the Fed today, but that could change, and so you want to be on alert. All right, you guys have a great one. I'm going to go to the trading room and get ready to rock it. Don't forget, guys, we have daily passes and weekly passes. If you just want to pop in the live day trading room and check it out for a day or a week, check it out at verifiedinvesting.com. Have a great one. Take care.